Hello again, friends. The last few years have been a wild ride in the real estate market, and we've been getting a lot of questions again regarding what's next for the real estate market. Well, there's been a lot of speculation around when interest rates are coming back down after the market experienced the highest mortgage rates in 20 years at nearly 8% in October of last year. I am happy to report that the Fed has now announced that highly anticipated movement is coming very soon. But why do I feel so certain that it's happening now when it's been talked about for the last several months but hasn't materialized? Well, the Fed has been painfully reluctant to lower interest rates after having sent them to 20-year highs last year in a move to pump the brakes on what was a significantly overheated housing market. But since inflation has been trending down to a more acceptable number over the last several months, and we've seen steady growth in the jobs market in post-COVID economic recovery, there hasn't really been anything significant enough to spur the Fed to ease up on rates. But thanks to the oops in the released labor market data a couple weeks ago, a revised jobs report revealed growth of only 5.7 million more jobs compared to pre-COVID highs, versus their initial report indicating 6.5 million jobs, a delta of 800,000 fewer job creations than they originally thought. Because we know that bad news for the economy translates to good news for interest rates, this less than expected growth in job creations was the break investors have been waiting for, as the Fed anticipates formalizing the first quarter point drop when they meet in mid-September, and it's likely that a second rate drop will be announced right after the presidential election in November. Well, with the average month supply of inventory also having finally begun to increase to levels more consistent with a balanced market, it seems like this drop in interest rates may be timed such that it's not going to spur another round of bidding wars, spiking prices like we saw and experienced in 2021 as a result of housing inventory having dropped then to nearly all-time lows when everyone was taking advantage of those once-in-a-lifetime low interest rates due to the pandemic. But additional data indicates that the impending drop in interest rates doesn't necessarily translate to a promise of a more affordable housing market for a couple of reasons. Check out my next 2-minute video on why I am not convinced that affordability is going to improve with this coming interest rate drop and what that means for your buying and selling timeline.